Alright guys, so the global trade war is changing the world as we know it. Now even before Trump launched the boats, the world was already going a dramatic shift from the west to the east. Now Biden started the ball rolling and Trump just made things worse. The moment the White House hit the world with the tariffs, it confirmed one thing. The US will be trading less with the global economy. While countries right now they're trying to get a reprieve from the punishment, major economies have to diversify. Now, Besson once again has confirmed what the art of the deal is. It is to force the world to build factories in the US in exchange for paper dollars, deindustrialize your country to collect greenbacks because it's the reserve currency.
In game theory, it's called strategic uncertainty. So you're not going to tell the person on the other side of the negotiation where you're going to end up. And nobody's better at creating this leverage than President Trump. He's shown the high tariffs, and here's the stick. This is where the tariffs can go, and the carrot is come to us, take off your tariffs, take off your non-tariff trade barriers, stop manipulating your currency, stop subsidizing labor and capital, and then we can talk.
Now, hope you heard this. The US game plan is strategic uncertainty, is to keep the world off kilter and trapped in a constant state of fear. You then lowball countries with an awful deal and you pray they take it. Now, the US wants the world to let the dollar fall and allow the US to subsidize their industries, but you can't do the same. And now a neutral power has had enough. Switzerland is making a dramatic pivot to Beijing's economy. While the Swiss president went to Washington to lobby Trump to remove the tariffs, their foreign minister was in China, and this definitely wasn't a coincidence. Now, before the 90-day pause, Switzerland was hit with a 31% tariff, and that's a very big import tax that will most definitely see a lot of their exports drop severely. And this includes luxury watches like Rolex as well as medicine. The trade war is about to hammer down on the Swiss economy, and the country is more than just banking or financial services. And if the tariffs stick, almost $50 billion in exports to the US will get affected. And this includes pharmaceuticals that are 42% of total exports. Other products like gems and timepieces will suddenly cost more as well. And because these are discretionary products, US consumers can simply walk away and not buy. So there's a big urgency to get Trump to do a big U-turn. And it looks like a win for the US economy, at least for now. The Swiss pharma giant Roche is planning to invest $50 billion in the US over the next 5 years, and this will create more than 12,000 jobs in the country. Now, this will be used as a bargaining chip to get Trump to drop the overall tariff rate on Switzerland. And if Trump plays ball, then tens of billions of Swiss investments will flow into the United States. But here's the problem: Trump is extremely mercurial. If his end goal is to reindustrialize the US at all costs, then the tariffs on Swiss exports are ultimately not going to come down. And there's a limit to how much Switzerland can ship production to the US, because whatever is made in the country will cost so much to manufacture that exporting the products elsewhere just won't be viable. And that's why their foreign minister is in Beijing to start diversifying their trade away from the US economy. China's economy is now the great rebalancer out there.
L'exportation de biens au cours des 6 dernières années a redoublé, 100% d'augmentation. Et l'importation de Chine en Suisse a augmenté de 60%. Donc c'était une histoire de succès. Nous voulons regarder au futur avec optimisme. Il était important pour nous avoir de bonnes relations avec la Chine sur tous les plans, non seulement sur le plan commercial, et même avec des visions critiques là où il y a des différences. On ne doit pas être identique sur tout. Mais en gros, nos relations sont très bonnes et il est important qu'elles restent tout aussi bonnes pour les prochaines 75 années.
So the country wants more economic partnership with China for the next 75 years. And once again, this brings us back to why economies like Spain in the EU, they want more Chinese trade. Now, while Trump claims that the world has imposed high tariffs on their imports, that is not really the case anymore. This is especially so for imports into China. There's more free trade between China and the world versus the US. According to the World Bank, China's effective tariff rate to the world is only at 2.2%. It's a whole different story with the US. Thanks to Trump's tariff war, the effective rate has flown up to nearly 30%. Even if the US does an indefinite pause, countries around the world will still be facing a flat tariff of 10%. That's 5 times more than China. And if that's the case, which economy do you want to build long-term relations with? Not only is that a big problem, trying to make a deal with the dream team is another challenge. There are a lot of terms and conditions that go beyond just tariffs. Now, a big part is to get countries to isolate China to blockade Chinese trade. However, that is clearly not working very well. Even Besson is finding a lot of trouble trying to sign the deals. The numbers themselves just don't make sense.
He said that he has made 200 deals on tariffs. 200 deals? Who has he made deals with? Is there actually any deal at this point?
I believe that he is referring to sub-deals within the negotiations we're doing. And, Martha, if there are 180...
But those aren't actual deals.
Martha, if there are 180 countries, there are 18 important trading partners. Let's put China to the side because that's a special negotiation. There's 17 important trading partners, and we have a process in place over the next 90 days to negotiate with them. Some of those are moving along very well, especially with the Asian countries.
So 200 deals spread across how many countries? Are these just 200 sub-deals over a couple of trading partners? Now things are so blurry that we can't even get a straight answer from Besson. Another problem is the strength of the US consumer. Now when a company plans to build a factory in the US, they want a strong consumer base to get a return on their investment. But if US consumers are facing an overall tariff rate of 20%, this is going to destroy their budgets. The 245% tariff on China is also going to affect the exports of other trading partners. Economists are expecting US imports to collapse in the months ahead after the front loading of the goods in Q1. Suppliers around the world, they are expecting a ton of orders to be cancelled. In Q2, US imports are going to drop by 7% and could get worse if Trump U-turns on his 90-day pause. And thanks to US dependency on Chinese goods, the overall level of imports will drop. This is especially bad for Swiss exports like luxury watches and all their discretionary goods. More money will get funneled to the essentials, and even high-income earners, they'll be hunkering down. So the pivot to China shouldn't be that surprising. Countries need cheap Chinese inputs to lower their cost of production. They also need to secure more markets to export to, especially if the US tries to make everything themselves. However, let's look a little beyond the US tariffs on Chinese goods. What about China's retaliation on US goods? Well, according to Apollo, US companies are getting the shorter end of the stick. Companies in the US are going to face a double squeeze. S&P companies earn 6 times more from China directly than their exports from the US to China. China's tariff retaliation is going to grind almost $200 billion in US imports to zero. Meanwhile, do you think Chinese consumers will buy more US products during this trade war? From McDonald's selling burgers to Apple selling iPhones to Chinese consumers, those sales are going to drop. Consumers will ditch Starbucks for Luckin Coffee. And these are the real-world consequences to waging a trade war with China. And as American revenues collapse, the threat of layoffs will once again increase. Once again, US consumers, their buying power could take another plunge. But beyond just the tariffs, there's another reason why the world still needs the Chinese economy. At this time, it revolves around China's tech progress on AI chips. Beijing has been under heavy semiconductor curbs, and that started way before Trump, under the Biden regime. And since then, China has still been able to make big technological leaps. Now, the Wall Street Journal confirms it. Huawei has developed a new AI chip that seeks to match NVIDIA. Chinese chip makers are hot on the heels of the US. China is self-funding their own tech progress, and they are catching up. And this is the Ascend 910D chip that's supposed to compete with NVIDIA's H100, which is more or less their main product now. Will the Ascend 910D outcompete the H100? Now, maybe it will, maybe it won't. But even if it's half their performance, it won't be a problem. Chinese companies will simply buy double the amount because the overall cost of production would still be cheaper. It's a big reason why Jensen Huang traveled all the way to Beijing. It's to access the competition and to ensure NVIDIA doesn't completely exit the Chinese market. Because if they do, they will be giving up the world's biggest semiconductor market to Huawei. NVIDIA is already about to take a $5 billion write-down from Trump's restrictions. An entire product line is about to be scrapped. But time doesn't stand still. Chinese competitors are taking away Nvidia's market share. This year alone, Huawei is slated to ship more than 800,000 910B and 910C chips to Chinese companies, and this includes both state-owned telecoms and private AI companies, giants like ByteDance. This will provide Huawei with even more revenue to further push their research and development along. And remember that other countries are seeing everything play out, especially members of the BRICS. Now, when the US restricted their chips to China, it wasn't just Beijing that was affected. Now, before Biden left office, he carved the world into three tiers, and that determined which countries were able to get the best US AI chips or not. And as we can see, very few countries are in blue, tier 1. Most are in tier 2 and even tier 3. They can't access the best Nvidia chips without restrictions on quantity as well. More importantly, there are also export curbs to prevent chips from flowing to China. This is how the US is able to maintain their semiconductor dominance, at least for now. Only the G7 gets total access to American chips, the global majority will get the scripts. But with Huawei making progress, this threatens to flip the whole situation on US chip companies. The global south is a big market hungry for chips, and if Trump doesn't allow Nvidia to sell to them now, who do you think will fill in the gap tomorrow? China's Huawei will be more than happy to flood the world with Chinese chips. It will be the EV playbook once again. Once Beijing is able to find a way to manufacture the chips on scale, the entire ecosystem, the whole supply chain will kick into place. Then we'll see affordable Chinese AI chips in Asia, the Middle East, Latin America, and Russia and beyond. They will grab market share and revenue from Nvidia. And according to many experts, China's design capabilities are not far behind. All that's left is making the chips. The final frontier are the lithography machines themselves.
On chips, right, the design capabilities of China are not far behind, right? If we go back to 2019, Huawei became the biggest customer of TSMC, right? They succeeded Apple. They actually launched the first 5 nanometer chip in the world. They launched the first 7 nanometer AI accelerator before NVIDIA, right? With the the original Ascend 910. So Huawei is definitely top notch on design, but they've been kneecapped by not having access to TSMC. And so then when it comes to, hey, chip design, they're right there. Right, but then when it comes to ability to produce chips, they're further behind, right?
So there are big consequences for all the chip sanctions, and the same thing goes for Trump's tariff war as well. Sooner or later, China will catch up. Now, this also creates the desire for countries to diversify their options away from the US. We're going to continue to see more countries trade more with China for both the immediate and the long-term benefits. So it's going to get even more messy down the line. But let me know what you think. Will countries shift closer to China's orbit? And how long more before Huawei catches up to Nvidia? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.